that.
Right.
Yep. If you look at certain parts of the market, but you've got like 40% of the S&P hitting new highs. Names like Comcast, our parent company, Borg Warner, Caesars, Home Depot, exactly the kinds of stocks that John Najarian was just talking about with Best Buy, L Brands, Lennar, Lowe's, Ross, Target, Ralph, TJX, Coca-Cola, Mondelez, Chevron, so many more. That's just a smattering of names from that list today, Jenny.
Right, and this is what we've been talking about for the past 8 months, which was we had massive leadership by 5 or 6 companies, by FANG and Tesla. For a long time, there was massive leadership. And so starting about 8 months ago, I started to say, we don't need those guys to lead anymore for the market to continue to do really well. And I think that's what we're seeing. We're seeing this broadening out. The foundation of the market is getting more stable. Let the FANG trade take a pause. That's okay. Scott, when you asked me before, is this as good as it gets? That depends on 2 things. That depends on your time frame, and if your time frame is short and you're heavy mega cap tech or the reopening trade, like maybe it's as good as it gets for you now. If you're a long-term investor, the answer is it's never as good as it gets. Go back and look at a 100-year chart of the market, and there's always more upside to come. Do I think we could have a pause? Sure, why not? There's always a pause in store. Also, when you ask if it's as good as it gets, it depends on what sector you're in. Look at energy, look at financials, look at my universe. If you look at the Dow Jones Select Dividend Index, that's up 29% this year. So if it's as good as it gets for the big mega cap, large cap growth players of last year, maybe, but it's not as good as it gets for others out there who are still trading at a discount.
Okay.
So I think this is... Sorry, can I say one more thing on tech, though?
Go ahead.
Because I think this is like a year where we really need nuance. And so when we look at tech and we say, oh, tech's taking a pause, tech's out of favor, sure. Again, if you want to use a broad brush, you might not make money, but there's opportunity, and this goes back to exactly what John was saying. There's opportunity to make money in tech, and what's in our portfolio are things like, this is in our growth portfolio, Applied Materials up 54% this year, Cisco up 19%. Intel, which is actually still up a lot this year and more than the market and more than the tech index, VMware, IBM, these stocks are all up significantly.
From the basement,
even when you want to like poo-poo tech.
From the basement.
Well, I would say from the beginning of the year, and what I always say is, where's your starting point? Your starting point as an investor is always today. It's always here and now and going forward from today.
Okay.
So I think there is opportunity in tech.
Okay, so since you went there, I'm going to follow up. I'm going to follow up with you that since the opportunity is from today, let's not pay attention where Intel was, in the dumpster to where it climbed itself out, and now it gets downgraded to a sell at Atlantic Equities. Today, looking ahead from today, it gets downgraded from neutral to underweight. Following the appointment of Patrick Gelsinger, they say, as Intel CEO, we upgraded the stock to neutral, given the opportunity for a strategic change, right? That was in part why the stock started to rally again. However, they say, we do not believe that they have the answer to market share losses to AMD, right? That's the bottom line in this story. Whether you can make up the lost ground to AMD and NVIDIA and all of these other stories that are told so better these days than Intel seems to be telling its own.
Okay, but you're cherry picking one analyst. You can look at Baird, who hasn't outperformed with an $85
I could have gone to
price
Stacy
target,
Rascon,
Mizuho,
too.
who has a buy.
I could have gone to Stacy Rascon, too. He's the #1 analyst in the space, and he has a sell. I didn't use him.
He's also been wrong. But Baird, Mizuho, Credit Suisse all have really positive ratings. Also, when we want to talk about Intel's lunch being eaten by NVIDIA and AMD, well, let's just remember, Intel in this year, 2021, is expected to earn $18.9 billion. Guess what AMD is going to earn? $2.6 billion. Guess what NVIDIA is going to earn? $8.6 billion. Meanwhile, they're trading at multiples of 2 and 3 times greater than that of Intel. And if we want to look at where the puck's going or what's happening this year, Intel's, even after trading down a little bit today, is still up 13 and change % on the year. NVIDIA's up 10. AMD's down 16. So there's a semiconductor shortage. That just means we need as many chips as we can get. There is room for all of these guys to play and all of these guys to succeed, and that's what I think is going to happen.
Okay, so the other
Personally, I'd rather own the biggest and the cheapest.